Hey, Mike.
How are you, Jeremy?
Great to see you.
Good, good, good. You look very good.
Thank you. Appreciate it. Likewise.
Yeah, it's been can't wait for 2020 to end and have a new year.
Totally. 2020 has been exciting for our industry, but obviously just incredibly difficult for the world.
Unbelievable. It's been such a roller coaster. Just so many things happening at the same time.
Yeah, totally. I'm excited to have this conversation with you.
Yes, same here. I'm not sure if we've already started or not. So
Live.
okay, good, good, good. So I think we're starting our fireside chat on the rise of stablecoin. I'm the moderator, Mike Kayamori. I'm the founder, CEO of Liquid Group. We were the first global exchange to be licensed in Japan as a crypto exchange in 2017. So it's more than 3 years ago. We're also in the process of applying for our license in Singapore. So as one of the more earlier exchanges in the crypto fiat exchange space, we were always pro regulation from day one. But again, today is more about the stablecoin and myself and Jeremy. We go back quite some time. I was looking back on our emails and introduction. I think it was around 2017,
Yeah,
and it's been such a roller coaster. And we've spoken at I think the Singapore FinTech Festival. We spoke at the World Economic Forum in China, and so it's my honor and great pleasure to have you talk about the rise of stablecoin. But before we go in there, please, if you can, introduce yourself, your background. You've been a successful entrepreneur, a public, CEO, and how you started Circle and then Centre and USDC. So please.
well, thank you, Mike. Really appreciate it. Like I said, it's really a pleasure to be together here. Very brief on my background. I've been working as a technologist and entrepreneur in the internet industry since really as early as like 1993, and have, as you noted, I've worked on a lot of different products, programming languages, platform infrastructure, content creation tools, media platforms. A lot of the first generation of the internet, which was about sort of how do you bring content and applications and other things onto this open global network. I think in 2012, shortly after taking my last company public, I went down the crypto rabbit hole, and it was very difficult to get out. I'm still way, way down it now. And I think for me, back then and then in 2013 when I co-founded Circle, and this is a familiar refrain, right? A lot of what resonated for me then was this, seeing that crypto infrastructure, blockchains, digital currency, the promise back then of things like tokens and smart contracts, which were really just concepts that people were talking about as opposed to real things, really portended a future for the economic system and the financial system that I think was very similar to what happened to media and communications and commerce in the prior 2 decades. So that got me very excited that that level of transformation would be possible in the global economic system. I viewed that as a 10 to 20 year journey. We're at year 7. And so at least for the venture I'm working on now, and I think making really good progress. So when we started the company, the specific idea we were interested in was how could you take what we think of as kind of real currency, i.e. liabilities of a central bank, and represent that as digital currency and transact it over public networks and public protocols, sort of like we have public protocols for content and data. And we believed that was going to be possible. And we actually tried for several years. We worked a lot, as you have, with regulators to become licensed. We tried to design a system that could sit between the fiat world and the crypto world, where you could actually transmit dollars or euros or pounds over the Bitcoin network. And we're sort of saying, hey, could you use this as a public settlement network? That had a lot of challenges with it as a technology. And I think for good reason, Bitcoin has sort of stayed in the current phase, really in this kind of reserve asset space. It's obviously very transactable as well, but as a underlying infrastructure for how fiat value exchange happens, obviously not really designed to that. So in 2017, which is I think back when we first met, we started redesigning the infrastructure that we had been working on around the idea back then, what we called fiat tokens, what very shortly after became known as stablecoins, but this idea that you could represent fiat currency as digital currency, that you could actually issue that in a way which was transparent, trustworthy, compliant, regulated, and then provided a great market infrastructure for people to build on. And so we took a very different approach as we went into that kind of second iteration, and rather than launching, say, a direct to consumer product, we basically launched USDC as an infrastructure other people could build on top of. And we did that through a consortium, which we co-founded with Coinbase, called Centre Consortium. And up until now, it's really been the two of us working on that standard and promulgating it and putting it forward. That's really changing now as we brought on, I think, a very significant CEO to grow that consortium globally with other currencies, with other issuers, and really build a standard for how fiat stablecoins can work in the world, which we're excited about. And then really, for us, we've just been building on that and growing USDC and building other services around it. So businesses that want to transact and interact with it between the existing, financial system and a pure blockchain infrastructure for fiat can do that. And that's really a growth business for us. But that's sort of how I got here.
Amazing. I mean, we knew when you acquired Poloniex and then you divested. And also, I think there was probably kind of that aha moment for you to, launch Centre and USDC. And at the same time, when I was at the FinTech Festival, this was 2018, I was talking about the potential and even the threat of stable coins. So this was 2018. And just sharing data, USD Tether, which was probably the only option if you wanted some kind of stability in crypto, it was USDT. And from January 2017 to about summer of 2018, the market cap of Tether went from about roughly 10 million to 3 billion, right? And since it's about 19 or 20 billion today. Yeah. So from your perspective, maybe you can talk, the benefits of fiat-based stablecoin, also the roles and the use case of stablecoins, and what really drove that massive growth this year.
Yeah, absolutely. So I think just stepping back, I think the first thing is I think people need to conceptualize things like USDC as a protocol itself. We think of the Centre stablecoin protocols like HTTP is a protocol that we use to exchange data and content, or SMS is a protocol we use to exchange text messages between a wide variety of systems. There are all of these protocols that exist for different kind of application layers on the internet, and fiat stablecoins and a fiat transaction protocol is exactly the same kind of thing. So a protocol like that ought to work across lots of different platforms. It's a little bit different because it has an underlying financial reserve and it has a regulated kind of infrastructure behind it. So it's definitely different than just a raw HTTP or something like that we think of. But conceptually, when we think about electronic money today, and obviously that varies, like you have, electronic money platforms in Asia, of course, like Alipay, which is, a centralized system. But you also have more distributed electronic money systems that are both centralized and decentralized, like the VisaNet. VisaNet is a standard set of protocols. It is an interoperability framework for card issuers and acquirers around the world, and people sort of govern that. The members govern it. They define the rules. Visa is not itself a financial institution. It's more of a framework for all these people to plug in. When we think about stablecoins and their role, we really ought to be looking at it as, here's this base layer protocol for fiat on the internet. And what are the use cases for fiat? What are the use cases, for just a dollar? And so the use cases are everything you'd use a dollar for everything from buying a cup of coffee to, being the collateral in a debt issuance to being a component of how you'd invest into a financial contract to being used as a speculative instrument in FX, like a dollar or a euro or what have you. It has incredibly wide use, and so at the core, a digital currency unit like that has the same breadth of use, and it should. Now, we're just getting to a place where the actual infrastructure you can deploy on public internet networks with this is actually going to support that diversity of use cases. We're seeing third generation blockchains that can support tens of thousands of transactions per second, that can deliver settlement finality in literally 300 milliseconds and do that at an incredibly inexpensive cost. And so everything from capital markets infrastructure to throwing 500 million consumers at that infrastructure is now starting to become possible. And so the use cases are going to be really broad. This year, I think it's been a lot of different drivers. Growth in digital asset markets themselves has been a very significant driver. The explosion of DeFi, which is, I know, a major theme at this conference, which is all of these innovative protocols that enable people to interact with financial contracts in a decentralized way. That's been a huge growth driver for USDC specifically, within the DAI ecosystem or the Maker ecosystem, within Compound, Synthetics, many other Aave and many other platforms. But we've also seen other things. We've seen a lot of diversification. So dollarization is a theme that people talk about, which is essentially in the current macro environment, there is a lot of concern about what governments are doing. Certainly in the United States, that's part of the thesis on Bitcoin. But around the world, individuals, institutions, businesses are saying, I wouldn't mind holding dollars, and if I can have them in a digital form where I have the utility of the internet at my fingertips with that, that's very attractive. So we've seen very significant growth in things like USDC adoption in Latin America, in Africa, in Southeast Asia, in a number of markets. And I think that reflects that theme. And then I think most exciting, but is sort of the most emergent, is we are seeing organic use cases just emerge all over the place. We're seeing it's cross-border trade and settlement. We're seeing use as an investment asset, people who are actually using it as an investment tool, as payment receipts, remittances. It's used in emerging digital securities offerings. So it's starting to get used in a lot of different places. And I think one of the things that I'm most excited about coming off of 2020 into next year is I think we're going to see larger scale financial institutions, larger scale consumer fintechs, household names that are going to start pointing their customer bases at these protocols. And that's, I think, a moment we've certainly been working towards for 7 years.
Of course. And I'd like to touch base about, how you look at the future in stablecoins and how it will potentially evolve as a visionary in this space. But before we go there, I think one of the other key trends or, the buzz or hype is around DeFi. You can see in this this conference that we talk a lot about DeFi. I think you touched a little bit around DAI and Compound and all those, but how does stablecoin play a role, a critical role in this growth of DeFi, or maybe even the challenges or the opportunities in the DeFi space?
Yeah, so I mean, I was listening a little bit to the discussion before this. I mean, I think there's obviously this tremendous growth in total value locked in DeFi protocols. I think a humongous amount of the use is people who are lending and people who are borrowing. So it's sort of this nascent, sort of interest rate and capital market for currency. There are people who are doing that for speculative reasons. So people who are effectively using these protocols as a margin protocol, as a way to go long or whatnot. And then there's people who are just outright want to access this as a way to either lend and get a return, so it's a savings product, or have a demand and want to borrow. And so I think it's very nascent. I mean, most of this stuff has seen the growth just in the past 7 months, 6 months, right? It's been this very rapid growth. I think it's when we step back and look at this in a few years, what it looks like today is going to look quite small. So I have a great deal of faith that this is going to grow. I think that it's just very compelling. I mean, this gets to the fundamental thesis here, which is that if people and entities can transact and enter into financial arrangements directly over the internet with no counterparty risk, mediated by contracts that are enforced by machines and are perfectly transparent and auditable, that is a huge improvement in how financial services can be rendered and accessed by individuals and by institutions. So it's very, very compelling in that sense. And so that model of financial services delivery, I think, is one that will be attractive to a very large number of people around the world, and businesses too. I think it's attractive to businesses as well. So I think those are some of the drivers and what's been going on there. And everyone, I think, talks about the composability of all these different innovations, and that is obviously the programmability of money is a core thesis. It's as a technologist back in 2013, when we thought about, oh my God, what's going to become possible with digital currency, it was the programmability that got me most excited. I said, oh my God, if money is a native data type on the internet, and you can program it like you can program other types of data on the internet, and you can do that over open global networks, that's totally revolutionary. And so, so I think we're just seeing the starts of that. And the infrastructure, we know there's scalability challenges with Ethereum. In the next, there's layer 2, there's future things, but there's a huge amount of innovation happening at the infrastructure layer, and I think a lot of DeFi will move to that infrastructure, and we'll see that grow to a place where I think ultimately billions of people can interact with it and benefit from it.
Of course. Yeah, I mean, thank you so much. I think the opportunity in the DeFi space. Yes, it still has its challenge. It's still nascent, but we can see the excitement. And where there's excitement and demand and challenges, that's where innovation happens. So, and obviously for the DeFi space to grow, again, you need that stablecoin element to come in and help grow together, right? So it's truly exciting times. At the same time, from a regulator perspective, it will continue to be a challenge, right? Where they've always known the financial sector as a, centralized. There's always an intermediary. There's always an institution that oversees, and regulators will oversee those institutions. Yep. But again, in the DeFi space, where it's much more different, and I think regulators will continue to be a step back, but also they'll try to grapple how they can work together on that. But regarding that, right? So specifically on the stablecoin side, how do you look at regulation in the stablecoin space? And is it unique in certain jurisdiction, or is it different between U.S. and outside, or is there commonalities across regional regulators? Yeah. Maybe if you can share from that perspective, how you work with regulators and how you see that, that would be extremely interesting to, I think, the audience here.
Yeah, absolutely. I mean, it's a fast moving topic, actually, believe it or not. So I mean, I look, when we got started with USDC, I think issuing a regulated stablecoin was a relatively new idea. There were a number of firms attempting that, and I think a lot of the things that we thought were important are in terms of sort of soundness, safeguards, transparency, security. A lot of things that we needed to build self-governance models around. And we need to try and be as public and transparent of those, work with other industry leaders to define those. And that was trying to be out ahead of what we ultimately envisioned, would be, regulatory kind of frameworks that develop around this. And so, you kind of want to be out ahead of that. And I think it's really key for good actors in the ecosystem to be trying to solve the problems that regulators care about, but solve those well, so you don't have to have, I think, sort of rule sets that are over, kind of overextended in terms of their impact. One of the big things that obviously happened in the last 2 years is, Facebook's entry into the space, the concept of Libra, and obviously the original conception of that versus where it's kind of settling out to perhaps have its first phase has changed pretty dramatically. But that raised the bar on this enormously, and it raised the bar at the highest levels of government in all of the largest countries in the world, and a lot of attention was brought on this. And so I think in particular over the last year, there's been, I think, an attempt to build a lot of coordination at the G20 amongst the members of the G20 on what global stablecoin policy ought to be. And we've spent a lot of time on that. And there is, a framework through the FSB on the kind of regulatory and policy recommendations for stablecoin arrangements. I think what's interesting about it is a lot of what they've put forward as recommendations are reflected in frameworks like Centre Consortium, which embody this idea of a stablecoin arrangement with multiple parties that provides a set of safeguards around it. But that's now translating directly into actual policy. So what we're seeing is at the G7 level, very significant direct coordination on a set of kind of policy around stablecoins. And I think that's accelerating. And I think, over the next couple of years, there are going to be explicit policies that, call them regulations, call them whatever you want, that have to do with, what it means to be a stablecoin issuer of a full reserve or a fiat-backed stablecoin. I think there's going to be very specific rules that are introduced around, the kind of anti-money laundering layers that have to accompany these. And that's not just for stablecoins, that's for all crypto. And I think there's potentially a lot of significant negative impacts on crypto and DeFi from that, but it impacts stablecoins as well. But at the end of the day, I think, my view here is that it's really at industries, it's industry's responsibility to be addressing risks and doing it as thoughtfully as possible with technology solutions that actually solve the problems better than any regulator would ever solve them with actual policy. Like that's the space that we ought to be in. And so if you look at something like DeFi, and if I'm a traditional regulator, I'm saying this is completely fucking insane. Anyone transacting with anyone anywhere, this is, we can never allow this. This is not, not viable, and want to impose, various kind of rule sets around it. It's incumbent on the DeFi industry to say, actually, you know what? We are actually providing a better risk managed, more transparent, more auditable, safer environment for a set of different financial activities. And if it comes to things like financial crimes, I think the industry needs to be able to think about ways to bring things like self-sovereign identity protocols onto public blockchains, solve some of these problems with attestation layers that can flow through these protocols, and actually end up with, absolutely strong accountability at the law enforcement level, but in a level of financial privacy that exceeds what's possible in the existing financial system. So I think those are some of the things that need to be focused on. And I don't think this is just about put your head in the sand and hope that regulations don't come. It's actually really incumbent on industry to solve these problems and try and solve them creatively, and not just sort of wait around for rule sets to drop down upon us.
Of course. So it's you're saying it's inevitable that regulators or enforcement will come in, and that will potentially spur also innovation, so that rather than hiding or hope that it goes away, it's here. So within those regulatory frameworks, how can you continue to innovate and be successful? So then that kind of leads to my next question is, even when you just look at the USD stable coin, right? Well, there's already the private sector where there's Tether, there's yourselves, Circle, there's GUSD, USDT. Do you see like multiple stable coins in the same fiat? Obviously, there's other elements where Libra had a more grand vision, but just based on the fiat-based or fiat-pegged or fiat-backed stable coins, do you see multiple private-led stable coins in the same fiat, or do you see some kind of consolidation?
Well, I certainly think there'll be consolidation, but I think it goes back to something I said earlier, which is that we look at this through the lens of standards, and we look at this through the lens of interoperability, and this concept of an arrangement or a network or whatever you want to talk about it as. I think that's actually going to be key. So I think things like USDC will end up having many, many members of that consortium, many, many different issuers. You'll have members that are issuing other fiat stablecoins in other geographies and following the same technical standards, the same governance standards. I think that's how this will scale. I don't think there's a lot of room for so many of those arrangements to exist. I think, there's Visa and there's MasterCard. And, in other markets, there was, a different card network in Japan, which is obviously very significant. There's UnionPay in China that mimicked a lot of that. So you will have regional variants of some of these things. But I think for, a primary full reserve stablecoin protocol and arrangement that the financial sector, that fintechs, that others are actually depending on and building on, I think it will consolidate to standards. And I think that will happen reasonably quickly. It already is happening. I mean, it's happened very significantly in this arena over the last year. And I think that will accelerate in the next couple of years.
Very interesting. Yes, and I completely agree. And that's just even on the private side, right? So there's a lot of, I think Libra kind of spurred this, regulatory awareness. And then you see central banks, G20, G7, all talking about, the opportunity or how they should control and regulate. And then you see a lot of these, central bank-led digital currency initiatives. How do you look at the private or, the central bank-led versus the private ones? Do they coexist or do they have different roles, or how do you see that?
I mean, at a high level, I think the history of electronic money is one of private sector industry actors getting together to establish interoperability standards and implementing that. Now, some of that's been through centralized infrastructure like SWIFT or like VisaNet or things like that. But fundamentally, everything that we know and love of electronic money, we don't love it so much actually, but everything that we know of are these schemes and arrangements and standards. And I think principally driven by the private sector, at least in the West. There are exceptions to that in other markets where it is much more driven by a centralized government. And I think that will be the case as we go forward. I think in the United States, in Europe, in many parts of the Western world, I think that you'll see this race ahead with the private sector and establish those standards. And I think what's more likely to happen is convergence between those efforts and certain kind of underlying safety and soundness and oversight requirements that might come from someone like the Fed over the midterm, over 2 or 3 or 4 years or something like that, as opposed to all of a sudden, the Fed is hiring 800 people to go build something that they're going to run and maintain. I don't think that's actually what's going to happen.
So you don't think once the public or the Fed or the central bank has their own digital currency, they'll suddenly ban private-led cryptocurrency?
No, I mean, and this just gets to the nature of I think a lot of how how this has scaled in the West historically, and I think frankly, fundamental infrastructure innovation is from technology firms and financial firms and others. I think a lot of that will continue to be the case. I don't think in most places it's going to come from governments directly themselves.
Of course. And coming from the internet space, I completely agree with you. So, I know we're past time, but I think maybe one more minute of, is there something that you can share with the audience that you haven't, kind of shared publicly so far, or, how you look at, kind of the future, or, as a closing argument or something, please.
I mean, I don't know if there's any special thing to share. I would just say, reflecting on a comment I kind of made earlier, which is that, when we started working on these ideas, 7+ years ago, like I said, I think it's like a 10 to 20 year journey. And I think we're just now, literally just now starting to get to the place where a lot of the things that we envisioned becoming possible are becoming possible. So I'm just really excited about what the next 10 to 12 years is going to bring.
Of course. All right. I think, we're over time, and Jeremy, it's always great to catch up with you. I think that concludes our fireside chat.
Awesome.
All right. Thank you so much.
Cheers. Bye-bye.